Masayoshi Son. A name synonymous with ambition and innovation. The SoftBank's founder and CEO, Masayoshi Son, is the third richest person in Japan, with a $20.6 billion personal fortune, topping the list of the world's richest people in February 2000 and then losing 97% of his wealth in the dot-com crash. Masayoshi Son is the billionaire founder and CEO of Japanese holding company SoftBank, which has invested millions in some of Silicon Valley's biggest tech companies, including WeWork, Uber, Slack, and DoorDash. Born in Japan in 1957, Son's journey is one of extraordinary highs and lows. From humble beginnings, he rose to become the richest man in Japan. His company, SoftBank, became a global powerhouse. Son's vision was audacious. He dreamed of a future powered by artificial intelligence. His early investments in Yahoo and Alibaba were strokes of genius. But his ambition also led to his downfall. Please like and subscribe. The story of Masayoshi Son is a cautionary tale. It's a story that continues to unfold. Son stands out as an oddball even in a world oversupplied with billionaire oddballs. He has made and lost more money than any man alive. Son's early life was marked by hardship and determination. Born to Korean immigrant parents in Japan, he faced discrimination from a young age. Yet, he refused to be defined by his circumstances. He devoured books on economics and business, dreaming of a future. At 16, he traveled to America, seeking advice from Ray Kroc. Kroc's words, "Choose one thing and become number one," resonated deeply. Son enrolled at UC Berkeley, majoring in economics. He was a restless student, always searching for opportunities. He imported arcade games and patented a voice-activated translator. This success fueled his ambition and confidence. In 1981, at 24, Son founded SoftBank. Japan's tech industry was in its infancy, but Son saw an opportunity. He identified promising startups and emerging technologies. His early bets on Yahoo Japan and Vodafone Japan were shrewd. Son's ambition extended far beyond Japan's borders. He envisioned SoftBank as a global technology powerhouse. He understood the internet as a transformative force. This vision transformed SoftBank into a global technology giant. For a time, it seemed that everything Masayoshi Son touched turned to gold. His investments consistently outperformed the market. He became a celebrity CEO known for his bold pronouncements. His confidence, however, would prove to be his undoing. Blinded by his past successes, Son became increasingly reckless. The cracks in Son's empire first began to show with the disastrous WeWork IPO. Son's reputation as a visionary investor was tarnished. The fall from grace was swift and brutal. Masayoshi Son, once hailed as a genius, was now being criticized for his recklessness and hubris. The collapse of WeWork, once a symbol of SoftBank's investment prowess, became a cautionary tale of unchecked ambition and the dangers of Silicon Valley hype. Investors, once eager to back Son's every move, now questioned his judgment and the sustainability of SoftBank's investment strategy. Despite the setbacks, Son remained defiant. He acknowledged his mistakes, admitting that he had become too arrogant and too emotional in his investments. He vowed to learn from his missteps and to refocus SoftBank on a path of sustainable growth. He began selling off assets, including stakes in Alibaba and T-Mobile, to shore up SoftBank's finances and to fund a massive share buyback program. The road ahead for Masayoshi Son and SoftBank is uncertain. The company faces significant challenges, including a mountain of debt, a volatile market, and increased scrutiny from investors. Yet Son's ambition remains undimmed. He continues to believe in the transformative power of technology, and he is betting big on artificial intelligence, robotics, and the future of computing. Only time will tell if he can regain his former glory and lead SoftBank to new heights. His story, however, is far from over. Son stands out as an oddball even in a world oversupplied with billionaire oddballs. He has made and lost more money than any man alive, topping the list of the world's richest people in February 2000, then losing 97% of his wealth in the dot-com crash. It serves as a powerful reminder that even in the face of adversity, even after experiencing both the dizzying heights of success and the crushing lows of failure, the human spirit of innovation and perseverance can endure. Masayoshi Son's story begins in 1957 in Tosu, Japan, a time when the nation was still rebuilding after the devastation of World War II. Born to Korean immigrant parents, Son's childhood was far from idyllic. He faced relentless discrimination, a constant reminder of his family's outsider status. This experience ignited within him a fierce determination to succeed, to rise above the limitations imposed by circumstance. Despite the challenges, Son's parents instilled in him a strong work ethic. His father taught him the value of hard work and resilience. His mother nurtured his intellectual curiosity. Young Son devoured books on history, science, and economics, his mind eager to absorb knowledge and explore the world beyond his small town. At 16, driven by an insatiable thirst for knowledge, Son made a life-altering decision. He traveled to America, seeking to meet his idol, Ray Kroc. Kroc offered him simple yet profound advice. Choose one thing, and become number one in the world at it. He returned to Japan, determined to make his mark on the world. Following his encounter with Kroc, Son set his sights on pursuing an education in the United States. He enrolled at the University of California, Berkeley, a melting pot of cultures and ideas, where he immersed himself in the world of economics and computer science. He saw firsthand the transformative potential of technology, the way it was beginning to reshape industries and redefine the very fabric of society. While at Berkeley, Son's entrepreneurial spirit flourished. He was a restless student, constantly seeking opportunities to apply his knowledge and test his business acumen. He imported arcade games from Japan, capitalizing on their popularity in the United States. He even patented a voice-activated electronic translator, later selling it to Sharp Corporation for a considerable sum, his first taste of significant financial success. These early ventures, though seemingly disparate, revealed a pattern that would define Son's career, an uncanny ability to identify emerging trends and capitalize on them. He possessed an intuitive understanding of technology's potential, coupled with a willingness to take calculated risks, a combination that would serve him well in the years to come. His time at Berkeley was not solely focused on academics and business ventures. He actively sought out mentors and built relationships with fellow students from diverse backgrounds. He engaged in spirited debates about the future of technology, absorbing ideas and perspectives that would shape his own worldview. This period of intellectual exploration and personal growth laid the foundation for his future success, instilling in him a global perspective and an appreciation for the power of collaboration. In 1981, armed with a degree from Berkeley and a head full of ideas, Masayoshi Son returned to Japan, determined to make his mark on the country's burgeoning tech industry. At the age of 24, he founded SoftBank, a name that reflected his vision of a company built on the foundation of software, the soft infrastructure that he believed would underpin the future of technology. Operating from a small apartment in Tokyo, with just 2 employees and limited resources, Son's early days were a whirlwind of activity. He spent countless hours researching emerging technologies, meeting with potential investors, and pitching his vision for a company that would connect Japan to the global technology revolution. He possessed an infectious enthusiasm and a remarkable ability to articulate his vision, qualities that proved instrumental in attracting early investors and partners. Initially, SoftBank focused on distributing software to computer retailers, a strategic move that allowed Son to gain a foothold in the market and build relationships with key players in the industry. However, his ambitions extended far beyond software distribution. He saw SoftBank as a platform for innovation, a vehicle to invest in, and nurture promising startups that were developing the technologies of the future. Son's early investments, often made with a combination of intuition and calculated risk-taking, focused on companies operating at the forefront of the nascent internet revolution. He saw the potential of the internet to connect people and businesses in unprecedented ways, and he was determined to position SoftBank at the forefront of this transformative shift. SoftBank's early years were marked by strategic investments and acquisitions. Son identified promising startups, often backing companies others dismissed as too risky. His investment in Yahoo, Japan became a major success. Acquiring Vodafone Japan, he transformed it into SoftBank Mobile. These successes fueled Son's ambition and drive to innovate. He instilled a culture of innovation and risk-taking at SoftBank. Failure was seen as a learning opportunity, a stepping stone to success. Flush with early successes in Japan, Masayoshi Son set his sights on global expansion. He envisioned SoftBank as a global technology powerhouse. Son's ambition was driven by a belief in the transformative power of technology. He made bold and often controversial moves in the tech industry. Son saw the internet as a force to connect people and businesses globally. SoftBank's diverse investments positioned it to capitalize on global trends. He embarked on strategic investments and acquisitions. Despite criticism, Son remained confident in his long-term vision. By the turn of the millennium, Masayoshi Son was already a respected figure in Japan's technology sector. He envisioned SoftBank as a global force in the burgeoning internet economy. This ambition led him to invest in a fledgling Chinese e-commerce company called Alibaba. In 1999, Son met Jack Ma, the charismatic founder of Alibaba, at a conference in China. At the time, Alibaba was a small startup operating out of Ma's apartment. Son saw something different in Ma and his vision for the future of online commerce. Recognizing a kindred spirit in Ma, Son believed Alibaba was perfectly positioned to capitalize on China's market. Son's decision to invest in Alibaba was a gamble, an intuition-driven leap of faith in Jack Ma's vision and leadership. While others balked at Alibaba's lack of a proven track record, Son saw potential. He recognized in Ma the same entrepreneurial spirit and belief in technology. Son offered $20 million, a significant sum for Alibaba. Ma hesitated but saw the resources needed to scale. After intense negotiations, Ma agreed with the condition of a consortium of investors. Son agreed, confident in rallying support for Alibaba. The early 2000s witnessed the rapid growth of the internet and the rise of e-commerce. Masayoshi Son's bet on Alibaba began to gain traction in China's online market. Alibaba's B2B platform connected manufacturers with buyers across China. Taobao was poised to dominate online retail. Son's early investment in Alibaba, initially viewed with skepticism, was genius. Jack Ma's leadership and innovative company culture were key to Alibaba's success. Alibaba's valuation soared, boosting SoftBank's stake. Son's $20 million investment grew exponentially. This transformed SoftBank's balance sheet and solidified its global tech position. While Alibaba became SoftBank's crown jewel, it was one of many shrewd bets Son made. He diversified across sectors, focusing on tech-driven companies disrupting industries. His belief in telecom, media, and tech convergence defined the early 2000s. In 2000, he invested in Yahoo, the leading search engine then. This move, initially met with skepticism, proved savvy. Recognizing mobile tech's importance, he invested in global telecoms, transforming Vodafone Japan into SoftBank Mobile, a leading player in Japan. He also invested in Sprint Nextel, positioning SoftBank at the forefront of the mobile revolution. Son invested in promising startups, offering capital and mentorship. His ability to nurture startups solidified his reputation as a visionary investor. Through strategic acquisitions and relentless innovation, Masayoshi Son transformed SoftBank into a global technology powerhouse. The company's portfolio now includes leading companies in internet, telecommunications, media, and e-commerce. SoftBank's reach extends globally, with operations in Asia, North America, Europe, and emerging markets. Son's bold decision-making and belief in technology defined SoftBank's culture. He fostered an environment that encouraged innovation and rewarded big dreams. SoftBank became known for disruptive technologies, challenging the status quo. The company's influence attracted top talent globally. As SoftBank's fortune soared, so too did Masayoshi Son's personal wealth. His early investments in Yahoo Japan and Alibaba yielded astronomical returns. By the mid-2000s, Son had become the richest man in Japan. Son's wealth was never his primary motivation. He saw money as a tool to achieve his goals. His belief in technology's power to solve challenges drove him. SoftBank was his platform to invest in life-improving technologies. Despite his wealth, Son remained grounded in his values. he lived a relatively modest lifestyle. He was deeply involved in SoftBank's operations. Known for his informal style and enthusiasm, he connected with everyone. Son's rise was a testament to his entrepreneurial spirit and belief in technology. His story, however, was far from over. The challenges ahead would test his resilience and vision. In 2017, Masayoshi Son captured the world's attention with a bold move. He announced the Vision Fund, a $100 billion investment vehicle. It was a declaration of Son's belief in technology's transformative power. The Vision Fund aimed to reshape entire industries. Son secured commitments from the world's largest investors. The fund focused on emerging technologies like AI, robotics, and autonomous vehicles. True to its name, the Vision Fund's investment strategy was driven by Son's long-term vision of a future transformed by technology. He believed that we were on the cusp of a technological revolution driven by advances in artificial intelligence, robotics, and ubiquitous connectivity that would fundamentally alter the way we live, work, and interact with the world around us. The Vision Fund, he believed, would be the engine that powered this revolution. Unlike traditional venture capitalists who typically spread their bets across a wide range of companies, the Vision Fund concentrated its investments in a select group of startups that Son believed had the potential to become global giants. He was not afraid to make large, concentrated bets, often investing hundreds of millions, even billions of dollars in companies that were still in their early stages of development. The Vision Fund's investment portfolio read like a who's who of the tech world's most ambitious and disruptive startups. It included companies like Uber, the ride-hailing giant that was upending the transportation industry, WeWork, the co-working space provider that was reimagining the future of work, and Gatekeeper, the Chinese ride-hailing behemoth that was challenging Uber's global dominance. Son's investment thesis was not always easy to grasp. Critics argued that he was overpaying for companies with unproven business models and questionable paths to profitability. They pointed to the Vision Fund's investments in companies like WeWork, which was burning through cash at an alarming rate, as evidence of Son's recklessness. Son, however, remained undeterred, convinced that he was backing the companies that would define the future. With billions of dollars, the Vision Fund embarked on a global spending spree, investing in startups across various industries and geographies. Son's strategy was no longer confined by traditional boundaries. He saw opportunities everywhere, from Silicon Valley to Southeast Asia. The Vision Fund's investments often had Son's personal touch. He was hands-on, meeting regularly with founders and leveraging SoftBank's network. The Vision Fund's scale sent shockwaves through the venture capital industry. Startups were courted by SoftBank with offers too good to refuse. Son also acquired stakes in established tech companies like ARM Holdings and NVIDIA. The Vision Fund's early successes, coupled with Son's reputation, created a halo effect. The fund's investments were closely watched, seen as a stamp of approval. Rumors of investment sent valuations soaring. Founders clamored for a meeting with Son. Investments became self-fulfilling prophecies, driving valuations higher. The fund attracted talented individuals drawn to Son's vision. It became a magnet for engineers, designers, and data scientists. The early years were a period of unprecedented success. Investments generated impressive returns, making Son one of the world's richest individuals. The future seemed limitless. However, cracks were beginning to appear. The investment strategy was inherently risky. Large, concentrated bets on unproven business models, high-profile missteps could derail the enterprise. The Vision Fund, for all its early promise, was not immune to the forces of gravity. The same factors that fueled its rise, a bull market and a surfeit of capital, contributed to its downfall. As the global economy strained, the cracks in the Vision Fund's foundation widened. The Vision Fund's heavy reliance on debt financing raised red flags. This strategy carried significant risks if the market turned. Adding to the pressure was the growing scrutiny of SoftBank's accounting practices. The turning point for Masayoshi Son and the Vision Fund came in the fall of 2019 with the spectacular implosion of WeWork, one of the fund's most high-profile and controversial investments. WeWork, a provider of shared office space, had been a darling of the tech industry, its valuation soaring to dizzying heights on the back of its rapid growth and its promise to revolutionize the way people work. Son had been an early and enthusiastic backer of WeWork, personally investing billions of dollars in the company and persuading the Vision Fund to follow suit. He saw WeWork as more than just a real estate company. He believed it was a technology platform that would disrupt the traditional office market and create a global community of entrepreneurs and innovators. However, as WeWork prepared for its initial public offering in 2019, cracks began to appear in its carefully constructed facade. The company's business model, which relied on long-term leases and short-term rentals, was exposed as being highly vulnerable to economic downturns. Its corporate governance practices were called into question, with concerns raised about conflicts of interest and self-dealing by WeWork's flamboyant founder, Adam Neumann. The IPO was ultimately pulled after investors balked at WeWork's inflated valuation and its questionable financials. The company's valuation plummeted from a peak of $47 billion to less than $10 billion in a matter of weeks, wiping out billions of dollars of SoftBank's investment and dealing a severe blow to Son's reputation as a visionary investor. The WeWork debacle, while a significant setback for SoftBank, was not an isolated incident. It was symptomatic of a broader shift in investor sentiment that was sweeping through the tech industry. The exuberance that had characterized the bull market of the previous decade was giving way to a more sober assessment of risk and a growing recognition that not all startups were created equal. The COVID-19 pandemic, which struck in early 2020, accelerated this trend. The pandemic's impact on the global economy, with lockdowns and social distancing measures disrupting businesses and supply chains, exposed the vulnerabilities of many tech companies, particularly those in sectors like ride-hailing, travel, and hospitality that had been heavily reliant on growth to justify their lofty valuations. As the pandemic raged on, investors fled to safety, pulling their money out of risky assets like tech stocks and seeking refuge in more stable investments like government bonds. The tech-heavy Nasdaq index, which had more than doubled in value in the previous 5 years, plunged by more than 30% in the first quarter of 2020, its worst quarterly performance since the 2008 financial crisis. The Vision Fund, with its portfolio heavily concentrated in tech companies, was hit hard by the market downturn. Many of its investments, particularly those in sectors most affected by the pandemic, saw their valuations plummet. SoftBank's share price tumbled, wiping out billions of dollars of Son's personal wealth. As the market downturn dragged on, the Vision Fund's investment strategy, once hailed as revolutionary, began to unravel. The fund's reliance on debt financing, which had magnified its returns during the bull market, now amplified its losses. The halo effect that had once attracted startups and investors to SoftBank had dissipated, replaced by a growing sense of skepticism and doubt. Startups that had once clamored for a Vision Fund investment were now wary of the fund's terms, which often came with significant strings attached, such as demands for board seats and control over voting rights. Investors who had once flocked to SoftBank's side, eager to participate in the next big thing, were now questioning Son's judgment and the sustainability of his investment approach. The Vision Fund's struggles were compounded by a series of high-profile missteps. In addition to the WeWork debacle, the fund also suffered significant losses on investments in companies like Green, a provider of electric scooters, and Katera, a direct-to-consumer furniture retailer. These setbacks, coming on the heels of the pandemic-induced market downturn, raised serious questions about the fund's ability to identify and nurture successful startups. The Vision Fund's woes were not limited to its investments. The fund's management team, which had been assembled at great expense, began to fracture, with several high-profile departures. Rajeev Misra, the fund's chief executive, came under fire for his management style and his role in some of the fund's most controversial investments. As the Vision Fund's losses mounted, so too did the scrutiny of its operations. Regulators, policymakers, and industry analysts began to take a closer look at the fund's investment strategy, its accounting practices, and its governance structure. The fund's size and influence, once a source of pride for SoftBank, now made it a target for those who believed that it had become too big and too powerful. In the United States, the Securities and Exchange Commission, SEC, opened an investigation into SoftBank's accounting practices, focusing on the company's use of complex financial instruments and its valuation of its investments. The SEC's investigation, which was ongoing, cast a shadow over SoftBank and the Vision Fund, raising concerns about potential regulatory action and fines. The Vision Fund also faced criticism from lawmakers in the United States and elsewhere, who expressed concerns about the fund's links to Saudi Arabia and other foreign governments. Some lawmakers argued that the fund's investments gave foreign governments undue influence over strategic technologies and industries, potentially threatening national security. The increased scrutiny of SoftBank and the Vision Fund led to a series of changes at the company. Son, who had long resisted calls to cede control of the company he had founded, announced that he would step down as CEO of SoftBank, handing over the reins to a successor. He remained chairman of the company, but his role was significantly diminished. The decline of the Vision Fund was a stark reminder that even the most successful investors are not immune to the forces of gravity. Son's hubris, his willingness to make outsized bets on unproven companies, and his reliance on debt financing had come back to haunt him. The Vision Fund's losses, which totaled tens of billions of dollars, represented one of the biggest investment debacles in history. The Vision Fund's collapse had a ripple effect throughout the tech industry. It marked the end of an era of exuberance and easy money, a time when valuations soared to unsustainable heights, and investors were willing to overlook risk in pursuit of the next big thing. The tech industry, which had grown accustomed to a seemingly endless supply of cheap capital, was forced to confront a new reality, one in which profits mattered more than growth, and investors were more discerning about where they put their money. For Son, the Vision Fund's decline was a humbling experience. The man who had once been hailed as a visionary, a modern-day John D. Rockefeller, was now being criticized for his recklessness and his poor judgment. His reputation, carefully cultivated over decades, lay in tatters. Yet even in the face of this setback, Son remained defiant. He vowed to learn from his mistakes and to rebuild SoftBank into a stronger, more resilient company. He remained convinced that technology had the power to transform the world for the better, and he was determined to continue investing in companies that were pushing the boundaries of what was possible. Masayoshi Son's journey highlights the double-edged sword of ambition. His drive fueled SoftBank's rise, but also led to significant setbacks. The Vision Fund became a cautionary tale of overreach. Investments driven by hype overshadowed sound financial fundamentals. Disruption must be balanced with risk assessment and profitability. Son's story reminds us that even brilliant minds need humility and self-awareness. SoftBank's experience highlights the crucial role of market timing and adaptability in the tech industry. The company's fortunes were heavily swayed by market cycles, a reminder that even visionary companies are not immune to economic forces. The Vision Fund, launched during a bull market, benefited from abundant capital and a strong appetite for tech investments. This environment inflated valuations and masked weaknesses in some portfolio companies. When the market turned, the Vision Fund's exposure to overvalued companies was exposed. The COVID-19 pandemic highlighted the fragility of business models in the face of external shocks. The pandemic accelerated trends like remote work and the decline of brick-and-mortar retail. SoftBank's experience underscores the importance of adaptability and quick response to changing market conditions. Despite setbacks and harsh lessons, Masayoshi Son's journey is a testament to vision and resilience. Even with crushing losses and a global pandemic, Son believed in technology's transformative power. His ability to weather storms and chart new courses for SoftBank speaks volumes. The Vision Fund's struggles didn't diminish his enthusiasm for investing in groundbreaking companies. He champions technologies like AI, robotics, and IoT with a focus on profitability. SoftBank's story is far from over, continuing to adapt and seek growth. Son's legacy will be debated, but his impact on the tech industry is undeniable. His journey reminds us that innovation is driven by belief in a better future. The Vision Fund's stumble left SoftBank and Masayoshi Son at a crossroads. The audacious investment strategy was now under intense scrutiny. The company's stock price plummeted, erasing billions from Son's fortune. Yet, Son's optimism and belief in technology remained unwavering. He accepted responsibility and vowed to learn from the experience. SoftBank shifted to a more disciplined and focused approach. The company streamlined operations and divested non-core assets. The Vision Fund adopted a cautious approach, emphasizing profitability. SoftBank's mission to invest in transformative technologies remained unchanged. The Vision Fund's stumble served as a wake-up call for SoftBank, prompting a fundamental reassessment of its investment philosophy and risk tolerance. The company's new mantra became discipline and focus, a stark departure from the growth at all costs mentality. This shift was evident in its investment decisions, portfolio allocation, and risk management. Gone were the days of placing outsized bets on unproven startups. The Vision Fund became more discerning, prioritizing companies with strong unit economics and sustainable business models. The investment team now conducted rigorous due diligence and stress testing. This emphasis on discipline extended beyond individual investments. SoftBank prioritized sectors with deep expertise like telecommunications, e-commerce, and AI. It reduced exposure to vulnerable sectors like ride-hailing and shared office space. The shift, initially met with skepticism, proved shrewd. Subsequent investments generated solid returns, restoring investor confidence and stabilizing SoftBank's stock price. Masayoshi Son's belief in the transformative power of technology, particularly AI, remains unshaken. He envisions a future where AI permeates every aspect of our lives. SoftBank, under Son's leadership, is positioning itself to be a key player in this AI-powered future. SoftBank's portfolio companies are leveraging AI to enhance their products and services. Son sees AI as a tool to address humanity's most pressing challenges. This vision of an AI-powered future is not without its critics. Concerns about job displacement, algorithmic bias, and AI misuse are legitimate. The road ahead for SoftBank and Son is likely to be unpredictable. Son's belief in technology to shape a better future will continue to guide SoftBank's investments. Masayoshi Son's story is one of extraordinary contradictions, a testament to the unpredictable nature of both fortune and the tech industry. From humble beginnings in post-war Japan to global wealth, Son's journey is marked by audacious triumphs and humbling setbacks. His legacy with SoftBank is one of relentless ambition and innovation, pushing technological boundaries. Early investments in Yahoo Japan and Alibaba democratized information and connected billions. The Vision Fund, despite its challenges, catalyzed innovation and emboldened new entrepreneurs. Son's journey is a testament to resilience, learning from mistakes, and emerging stronger. His willingness to challenge wisdom, embrace risk, and adapt has left an indelible mark on the tech industry. Masayoshi Son's rise and fall from global wealth highlights the fleeting nature of financial success in technology. His fortune, once surpassing Bill Gates, fluctuated dramatically with the market. Yet, Son's story is about more than wealth. His belief in technology's power to solve humanity's challenges drove him. This vision was evident in his investments and commitment to innovation. The Vision Fund aimed to leverage technology to address global issues. Despite its ups and downs, the fund's ambition remains a testament to human ingenuity. True success is measured by impact, not just wealth. Son's legacy lies in the lives he touched and the inspiration he provided. As the dust settles on the Vision Fund's tumultuous early years, Masayoshi Son and SoftBank find themselves at yet another inflection point. The company, while bearing the scars of past missteps, remains a formidable force in the tech industry. Its vast portfolio encompasses a diverse range of companies operating at the forefront of innovation. Son, ever the restless entrepreneur, shows no signs of slowing down. His approach tempered by the lessons learned from the Vision Fund's roller coaster ride. But his fundamental belief in the power of technology to reshape the world remains as strong as ever. The company's current investments, made with a renewed emphasis on profitability and a more disciplined approach to risk, reflect a more mature, more pragmatic approach to technological disruption. SoftBank's future, much like the future of technology itself, remains unwritten. The The company's success will depend on its ability to adapt to a rapidly evolving technological landscape, to identify and nurture the next generation of game changers, and to navigate the complex ethical and societal implications of increasingly powerful technologies like artificial intelligence. Masayoshi Son, the enigmatic leader at the helm of this global tech titan, remains a figure of fascination and speculation. Will he be able to regain his former glory, to silence the critics who question his judgment, and his ability to adapt to a changing world? Only time will tell. One thing is certain: Son's journey, a testament to the relentless pursuit of innovation, the enduring power of vision, and the humbling lessons learned along the way, will continue to captivate and inspire, reminding us that the future is not something to be predicted, but something to be created. The SoftBank CEO is known for paying his executives handsomely, and he's far from the highest paid person at the company. Son stands out as an oddball even in a world oversupplied with billionaire oddballs. He has made and lost more money than any man alive, topping the list of the world's richest people in February 2000, then losing 97% of his wealth in the dot-com crash. He has been the largest foreign investor in both capitalist America and communist China, the biggest startup funder in the world, and the owner of 70% of Japan's internet economy. Please like, share, and subscribe.